All right, we are back, ladies and gentlemen, with another Ask MG. This is Matt Garland, NMLS number 58700, better known as MG the Mortgage Guy. We are live, we are blessed. Thank God for another day. Make sure you guys like, comment, share, subscribe. Hit the bell for notifications because we are dropping new videos every day, 4 p.m. Eastern Standard Time. And you can listen to the audio wherever you listen to podcasts, Spotify, Apple. Make sure you go download MG the Mortgage Guy Show on all podcast audio outlets. Oh, and don't forget to go to mgbookstore.com. Very important, most important thing I'm going to say today. Go to mgbookstore.com and make sure you pick up those bundles. Yeah, Tooks, I like what Tooks is doing with all these graphics and everything right here. That's what the fuck I'm talking about, bro. Y'all make sure y'all go. That's the first time I ever saw that, too, so that's why y'all getting that reaction. But make sure you go to mgbookstore.com. All right, so I'm back. I got super producer extraordinaire Jordana with me today.
Hello, Matthew.
How are you, Jordana?
Matthew Garland.
You are back.
I'm back, alive and blessed.
Like you never left.
Man, last week I was out bad, the flu.
Okay.
But I'm back.
No COVID.
No COVID.
Thank God.
COVID free. How are you?
I'm alive and
I
blessed.
see you out here coming back. You have the DC glow on you.
Yes, DC was real. Shout out to everybody who came to Howard University, EYL University's Home Buying Expo in DC.
Was it powerful?
It was impactful. It was powerful. It was a lot of black and brown people in the building. It was a free event. Shout out to our sponsors, Chase, for making that happen. And it was phenomenal. On a Saturday, it's freezing, but you got 1,400 black and brown people in the building taking notes, learning about real estate, credit, business. I mean, we speak about everything from home buying to investing to credit to access to capital. I mean, we spoke about everything. We spoke about free money with grant programs. So it was a lot of information in a short period of time.
That's amazing. I mean, I'm always a fan of black people coming on a Saturday to learn about money and finances.
Nah, it was definitely a good class. And people learned and they got great actionable items so they can go out there and execute, which is very important.
Well, shout out to the guys.
Shout out to the whole EYL University, the whole EYL Nation, EYL the Army, better yet the Navy.
Better the Navy.
Better yet the Navy. All right, so what's the question?
I mean, we have a lot of questions, but let's start off with one. Let's just
Matter of fact, and this is some of the questions. So we did something different at this last EYL Expo. We had a QR code that people could take a picture, scan, and ask questions. Complete a Google form. And they could ask questions. And in real time, while we was on stage, we would get these questions that were coming from the audience. And during the last 3 panels we would do about 20 to 25 minutes of Q&A. And I actually had a 30-minute solo where the guys, Troy and Rashad, was taking these questions and asking me directly. So the audience, that was the dopest thing about it, that we really, the audience had their voice heard. So we had 400 or 500 questions, as you see on the spreadsheet there. It's tons of questions.
Wild.
So I say, you know what? We're going to take some of these questions and we're going to answer them because I feel like a lot of people have the same questions. So we picked out a few.
The same questions, but they're all they're important.
They're very important. Very important. And we want to make sure that we are answering our audience questions to make sure that they are really retaining this information and they get value out of it.
Yeah, well, I want to start off with this girl. Her name is Tati Stinson. One of her questions was, let's talk about the pros and cons of buying a property with an LLC.
Okay.
Now, I know,
Go ahead.
A lot of the entrepreneurs, everybody thinks it's all easy, have an LLC, but there's a lot of cons too, and you have to know what you're doing. That's not child's play, right?
Correct.
All right, so let's break it down, because I know that much.
Strictly for live men, not for freshmen.
Okay.
Okay. So when you're buying an LLC, I would say, okay, we start with the cons.
Okay.
So some of the cons I can think off the top of my head would be a higher interest rate than a traditional conventional mortgage where you're putting into your personal name. So if you're now, first let me say this: when you're buying homes in your LLC, 95% of the time it's for an investment property, right? So investment property interest rates, especially in today's market, are going to be higher than a conventional investment property interest rate. So
Right.
let's just say, for example, if you purchased an investment property in your personal name, you use a conventional Fannie Mae Freddie Mac mortgage, you'll probably get a rate somewhere around, let's just say 8% today,
Mm-hmm.
right? And we're in December. We're filming this December. What's the date? The 12th.
The
We're
12th.
filming this.
Yeah.
So don't quote me on these rates. This is just a quote. This is not what you're going to get. You still have to qualify. I'm just using this as an example to give you guys a little bit of visual, okay? And if you use an LLC, depending on the lender, it can be anywhere from 9 to 11% in today's market, just depending on the lender, the program, etc. And also can be more expensive in terms of how many points or origination fees that you're going to pay as well. With a traditional mortgage, you'll probably spend 1%, maybe 2% max. With a LLC, and your loan in your LLC name, you'll pay 2 to probably 4%, just depending on the lender and what they want to charge you. So depending on origination fees, discount points, it could be a little bit more expensive. So that's one of the cons that I can think of off the top of my head. But that's really the only con as I'm sitting here thinking about it.
Well, what are they looking at? How are you qualifying, right? Are they looking at your bank statements?
So this is where the pros come,
Okay.
right? So again, if I think of another con while we're talking about this, I'll just say it. But the pros to me outweigh the cons, right? Yes, you will get a higher interest rate. Yes, it will be a little bit more expensive, but your tenant is paying it.
Mm-hmm.
That's the pro,
Right.
right? Less documentation. So with a conventional mortgage, it's a full document mortgage, meaning if you are a W-2 employee, you need to provide your W-2s for the past 2 years, your 30 days of pay stubs, 2 months of bank statements, copy of your ID. If you're self-employed, you need 2 years of tax returns, and we're going to qualify you off of the net income. With a LLC, you're not going to need any of that information. The LLC can be a brand new LLC. It doesn't need established business credit. You will have to personal guarantee it. As the owner of the LLC, you need at least a 620, 640 credit score, depending on the lender. But you wouldn't have to provide all that income documentation. So you're being qualified based off of the rental income of the property. And as long as that rental income can support the debt service, which is basically the mortgage and the property taxes and expenses, and the owner is making at least a 20% profit, then a bank will fund that project, even if you are a first-time investor. Now, I'm glad I said first-time investor. A con could be, depending on a lender, they won't lend in the LLC to a newbie, right?
Got
So
it.
there are some lenders out there that will say, and it's probably, I would say, 40% of the lenders out there won't lend to a first-time investor with these type of programs, but there's a good majority of the lenders that will. So that could be a con, just depending on the person and which lender they're trying to seek a loan from. And if they do lend to you, if this is your very first deal, there might be a little bit of premium of the points and the fees that you'll be charged just because you are newbie. They might require you to put more down payment down as well. I guess a con, well, it's not a con since we're talking about down payment. If you're comparing the two, both of them you're going to have to put down 15 to 25%. So for a single family, 15%. For a multifamily, 20 to 25%, just depending on the deal. So it's really the same thing. It's equal. Another pro of the LLC is you can potentially close faster because it's less paperwork. The really main thing is the appraisal is what you really need to see. What's the value? What's the rent schedule? Let's see exactly if this thing is really cash flowing, because sometimes people lie and just tell you, oh, it's getting this much in rent.
That's when you need like the rent rolls.
The rent rolls,
All right,
exactly.
see, I'm learning.
Go
I'm
ahead,
learning.
Jordana.
Okay.
Go ahead, Jordana. So we got to look at that rent roll or the rent schedule that the
Okay.
appraiser is going to give the lender. So when we underwrite it, we're going to look at the lower of the two. So if you tell me your rent is $5,000 a month, but the rent roll or rent schedule from the appraiser on the appraisal report says $4,000, then we're using the $4,000 to get you qualified. So, that is a pro when you think about speed, especially if you're in a competitive situation. You'll be able to close a lot faster. Another pro is that if you're buying your LLC, that mortgage won't go on your personal credit. It goes on your business credit. It's on the business side. Now, if you default or something like that, You personal guaranteed it, so that lender can come after you because you're the PG. But that mortgage won't show in your credit report. So if you wanted to go buy a primary residence, you don't own that house technically.
Got it.
Your business owns it,
Got it.
not you, Jordana.
Got it.
So that's a pro too. It keeps your debt to income ratio low.
Now, I'm the queen of the follow-up questions.
Okay, go ahead.
So I remember one time, we had a previous conversation about like LLCs, right? So I remember you were talking about like where to file your LLC. So there's like that whole Delaware conversation. So how does that affect it? Like if your LLC is,
So it depends on the lender.
you know what I'm saying?
Yeah, I get what you're going with this one. So it depends on the lender, right? There are some lenders that want you to file the LLC in the same state where you're buying the property at.
Got it. Okay.
There are some lenders that don't care.
Okay.
It just really depends on who's going to give you the best deal and what terms are more favorable to you as the investor. So you can definitely go ahead and try to file in Delaware or one of these other places where it might be more advantageous from a tax perspective, but the lender might come back and say, no, we need something here in the state. Like even like in Georgia, right? Georgia is for whatever, you can still be listed on your LLC and people can still Google and find out you're the owner of the LLC unless you have like a managing agent. I forget the technical term for it. A registered agent on the LLC, and then if somebody Google searches, they'll see that they're the registered agent except for you. But that's sometimes if people don't file their LLC paperwork accordingly, they don't know that. They're so happy to file an LLC and they do it in their name,
right?
And then you can still be searched and found. You know what I'm saying?
Right.
So, and again, it's good to know your rules because sometimes, again, certain states will still have a public record of who is the owner of the LLC. So you got to make sure you know that too when you create these LLCs. Will the registered agent be listed or will you? Because if you're trying to be incognito, you know what I'm saying? Like you may not want that information out there.
Yeah. Another question. I'm just speaking from Tati standpoint. So now, would it be wise to get your first property with your LLC?
Your first investment property?
Well, like let's say you have a nice little nest egg, right? Let's say you have the money, but you have a great business that's got the bank statement, right? And you've been living at home.
But this ain't bank statement loans.
So the LLC.
So
hold on now.
So that's not a bank statement loan, right? So a bank statement loan is something that's completely different.
Got it. Okay.
Right?
See, I'm messing it up. Okay.
A bank statement loan is more of like a non-QM loan. So when I'm speaking about is buying true investment properties.
Got it.
Now, can you do a bank statement loan and put it in your LLC even if it's a primary residence? Yes, but case by case depending on the lender. But if you're buying true investment properties, do I think your first property should be an investment property? Just depends on you as a person. You might be comfortable living at home. You might be comfortable renting right now.
Right.
And you might live in an area like New York, D.C., L.A. where it's so expensive where your $100K might not
do anything.
Right. But that $100K can get you in Detroit, Milwaukee,
Ohio, yeah.
Connecticut, one of these places where you can buy an investment property, get some cash flow. So yeah.
Okay.
In that situation, it might be more advantageous for you to buy your first property as an investment property and keep it moving from there.
All right.
But you just got to really know which lenders will allow you to use for you to be a first-time home buyer and buy an investment property. Because remember, when you have no experience of managing anything,
right? So
and these loans are already higher interest rates and things of that nature. So you're more of a risk to that lender because remember, these are portfolio loans.
Right.
These are loans that are not being sold on Wall Street. Fannie and Freddie Mae is not backing them. So it's more risk for the lender because they're keeping them on their books. So they might not like you as a first-time home buyer. They may want you to get some more skin in the game.
Yeah.
But if you can find a lender and you're ready to invest, then hell yeah, go for it.
It seems like to me, from what I'm hearing, it seems more pros. For sure. More pros.
There's definitely more pros than cons,
right.
100%. And again, as we've been talking about this, the only con that I can honestly think of is just higher rates and higher fees. But the higher rates are being paid by your tenants.
Yeah.
And the fees, if you buy right, at some point, if rates dip, you'll be able to refinance if you purchased it right, meaning below value,
Right.
you're
Know
not
the numbers.
paying exactly, knowing your comps and everything like that, there might be an opportunity for you to refinance and pull your money, your
Yeah.
original money back out the deal if you purchase right.
And the higher down payment protects you too. You don't want to come if you can't afford it, don't,
Well,
right?
you can't afford it. Well, again, if you can't afford it, you can't afford it. You shouldn't be buying or investing if
Right.
you can't afford.
Right.
So ultimately, there's little cons. Again, the biggest one is rate fees, but that's not really a huge con to me. I think there to put a bow on this. I think there are more pros to buying with the LLC than there are cons. So that's my opinion on that one.
I love it.
Well,
That's good.
if you love it, then I love it. And if you love it, leave your thoughts in the comments. Did I miss anything here? You tell me. What are your pros? What are your cons about buying property in the LLC? Like, comment, share, subscribe. And again, this is Matt Garland, NMLS number 58700, but better known as MG the Mortgage Guy. And I'll see you guys at the next video. Peace.